Well, junior gold miner DRDGold reported a 150% increase in first quarter headline earnings per share to 20 cents. The group's gold production for the quarter ended up 1% to the good, and that was up to 63,000 ounces, while total cash operating costs were slightly lower at 342,000 rand per kilogram. We cross now to the JSE to chat to Niel Pretorius, his CEO of DRDGold. Thanks so much, Neil, for joining us this morning. Looking at the kind of numbers that have filtered through today, it seems like the past quarter's been a good one for the group. Run us through some of the support factors here, because we know one of them has certainly been that gold price trading where it has.
Yes, that was certainly the biggest impact. I think the fact that we managed to contain costs and the fact that the gold price went up as much as it did are certainly the two biggest contributors to the numbers. So we're very pleased with the way that we ended the quarter.
Even where, you know, you've got those out there believing that gold price is going to head higher, they still don't want to be exposed to gold miners, you know, in bulk because of labor and other risks that prevail. So run us through your cost profile right now and how you're actually managing that, how sustainable the kind of management we've seen so far is moving forward.
Yes. Well, we've in fact become more of a gold factory as opposed to a gold miner, in the sense that we do mostly recycling of old tailings. That is a mechanized process, so a lot of the labor risks that face the gold mining industry in South Africa, we're phasing those out. We have one remaining deep level underground mine in our portfolio. We're in the process of selling that mine, and we are likely to make an announcement in that regard by the end of this year. But despite that, the gold price also for that particular operation was healthy enough or robust enough for it to also return a profit for the quarter.
Of course, that mine in the process of being sold off is Blyvoor. We'll be getting into the detail there. But before we progress on, I've got Mark Witten of Kaizen Asset Management with me at the desk, Neil, and he's got a question for you as well.
Yes. Neil, congratulations on the results. Just a quick question. In terms of, obviously you can't control the gold price, but in terms of the elements you can control, like some of them obviously being out of control, like rubber, acid, labor, etc. Where do you see your cost inflation going forward over the next 6 to 9 months?
Well, it's mainly electricity. Provided that the rand stays at current levels, we don't expect much of an inflationary pressure insofar as other supplies are concerned. But electricity is obviously going to be a big driver, because regardless as to where what the purchasing power of our local currency is, we have these extraordinary rises in electricity prices.
Mm-hmm. Of course, as you mentioned earlier, Neil, I mean, the Achilles heel for DRD has been that deep level underground circuit, and that Blyvoor, it's been ring fenced, you know, in terms of its risk exposure until now. Are you confident in that come December we are going to see a hiving off of this asset?
We received a number of offers, and I think amongst those offers there are certainly good quality offers. We're not looking at just dumping the asset or unloading the asset, offloading the asset rather. We want to transfer it into a safe pair of hands whilst also retaining some exposure to potential future upside. Mm-hmm. And there's certainly amongst the offers that we received opportunities to achieve just that.
Let's take a look at some of the other opportunities you're delving into right now, because you're focusing on further exploration in Southern Africa as a whole. I mean, run us through some of the opportunities you've identified in Mozambique specifically.
For Mozambique, we've really just done a site visit. I have a colleague who originates from Mozambique, and he's been to some of the gold producing areas in Mozambique, and he's now studying what sort of concessions are available, who might be willing to engage with us to see if we can establish a footprint there as well. But you know, our strategy around growth is one of cautious growth, so we're not getting involved in anything that we can't fund off existing cash flows. And with the initiatives that we want to launch in the new year towards optimizing extraction efficiencies at our recycling plants, a lot of our capital is accounted for, so it's very modest and very careful ventures into those jurisdictions.
Of course, it's interesting that you say it's a cautious approach that you've got towards those jurisdictions, because you've got certainly a presence in Zimbabwe already. So run us through the status of your operations in that territory, Neil.
We're very much collecting assets at this stage. You know, Zimbabwe is one of the countries where you could still peg claims, and we're doing that. We've got a very good team in Zimbabwe, comprising mainly of local Zimbabweans. So they're finding assets, they're finding potential future joint venture partners, and we're collecting asset there at a very healthy rate. We haven't spent a lot of money there, only about $2.5 million total exposure. Obviously, what we're also doing is exploring those assets, because you can't just hoard them, you've got to do something with them as well. So at this stage, it's collecting assets and taking them up the value curve, or at least trying to establish exactly what the potential of those assets might be. It's about 25,000 hectares in total claims that we have an interest in there.
The country's indigenization policies that have been put in place, one would assume, has taught you many lessons. Let's bring it back home and how that translates into our environment, because today we've got the ANC Youth League planning to march to the Chamber of Mines and the JSC, and that as part of a program, of action against youth unemployment, but also to push that nationalization agenda. We've had Marco Tufani of DRDGold very vocal about nationalization and his stance on it, seeing it as an unattractive policy. What's your view on the kind of rumblings that we're still hearing, Niel?
Look, insofar as Zimbabwe is concerned, we anticipated that there would be that sort of drive, and as a consequence, our relationship there is a 50-50 relationship. We may have to dilute out of an additional 1%, and we'll see where that where the regulatory environment takes us. Insofar as the South African musings of nationalisation are concerned, I think an intellectual debate on nationalisation is really doesn't add any value. The simple fact of the matter is that there are a whole lot of people out there who are unemployed, don't have the sort of education that provides access into decent jobs, and we need to come up, corporate South Africa in collaboration with government, we have to come up with an alternative promise, an alternative offer. Because at this stage, the only hope for those masses is the hope offered by irresponsible policies, as far as I'm concerned.
Yeah. Well, let's leave that conversation there for this morning. Niel, thanks so much for your time today. Niel Pretorius is CEO of DRDGold, that company having released first quarter numbers early this morning.